Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. This is going to be a nice cornucopia of stuff. We're just getting onto the show, Jerry, and there's just too much going on. And it might be a little chaotic at times, but there's a lot to discuss this week. My name is Jeremy Wiseman. I'm joined by Jerry Correia. If you want to get involved in the gold and silver market, the number is 18778 Silver, the website, guildhallwealth.com. Stick with us throughout the show because I think as the show goes on and you hear the presentation of the information that we're providing, it's not going to be, maybe I should get into this market, maybe I'll think about it. I should probably run to get into this market at this point. Jerry, where do you want to start? You want to start with the interest rate cuts?
Cuts in a healthy economy, Jeremy. Why are we cutting rates? Inflation continues to rise, but we are experiencing a heck of a lot of cuts around the world, beginning with, I think we had the Swiss National Bank with a 25 basis point. Actually, it was a jumbo cut, a 50 basis point cut. Then Canada Central Bank slashes rates to combat economic slowdown. The Bank of Canada slashed its key interest rate by 50 whopping basis points to 3.25%. on yesterday, December the 11th, marking its fifth consecutive cut. This aggressive move comes in response to rising unemployment, hitting 6.8% in November, weakening economy in Canada, a lot of jobs being lost.
Stagflation.
Stagflation's here. This central bank is trying to aim to stimulate the economic growth by cutting rates, while consumer spending is just continuing to lower. Obviously, credit card debt is through the roof in Canada, and this decision is expected to benefit variable mortgage holders and could potentially reignite the housing
Well, you can't have
market.
You can't get that both ways. You up the rates on the variable mortgage people, and now you're dropping the rates. So you can't. You don't get to say we're trying to help people out. I think, by the way, it is the great pivot. That is something that we've talked about. We talked about it at length, and then I think we kind of missed it actually, that it was actually happening, the great pivot. This comes from the Kobesi letter. There's been 62 rate cuts over the last 3 months, the most since the 2020 pandemic. And thinking about it this week, Jerry, I kind of started to think about 2018 when they were raising rates and the conversations back then. And the conversations were all about, well, the Fed needs to get bullets in the chamber because if there's a recession, they need to be able to drop rates. And you can't drop rates from 1% to 0 or from 0 to nowhere. So they had to start raising rates in order to be able to cut them later on. Right. And I feel like that's probably what we were seeing in many respects over the last couple of years is we got to raise the rates because eventually we got to lower them. And maybe it was the banks trying to collect more interest on things.
Yep.
But I think this time around, trying to put bullets in the chamber had a much bigger negative impact on the economy. And now when we're seeing the rates coming down, it appears to me, and I know you've got some information on this, that it's a panic rate cut. These are panic rate cuts. These aren't, well, we've got it all under control, as they want us to know, as they want us to think that that's what it is, that they've met their inflation targets. By the way, food is up something like 30% this year. So,
foodstuffs, yes.
So it's CNBC went crazy. They saw this stat, 31% on finished goods.
What about insurance? Insurance.
Everything's up. So you can't say that they've met inflation. So, it's a lie.
But CPI says it's coming down. It's hitting 2%.
So what's the panic? Mm-hmm. Give us some examples of what's going on behind the scenes as to why central banks are panicking to lower rates now.
Yeah, you know what? I got to bring up the article, Jeremy. It's from Ainsley Bullion. Their recent article was titled 9,000 U.S. banks failed the last cycle. Is this time different? I don't think so. In summary, the article really highlights the desperate state that the financial system is in globally. The article stresses how rising U.S. bond yields, triggered by the cuts of the U.S. Fed, are straining the U.S. banking sector. How many commercial banks have gone down recently? Even major banks. Although it's supposed to help the economy, cuts, mortgage affordability, these cuts have inadvertently fueled inflation expectations, just causing inflations to rear back. Causing bond collateral values to drop and weakening the U.S. banking system structurally. Why? Well, the U.S. bond market is the collateral right? The collateral for the banking system. So the Federal Reserve's decision to reduce adequate reserve requirements signals it's out of options. They did that recently to manage this upcoming crisis.
Well, speaking of out of options, though, everyone's becoming out of options because you have either inflation's getting you or they lower the interest rates, which lowers the value of our dollar, which means everything we're importing is more expensive, which means inflation's going up anyway as well. So you might save on a credit card payment, but you're going to pay more for other goods and services.
That's just it. It's only going to impact, the cuts are just going to impact the mortgage holders who have already, bought $1.3, $1.5 million homes. It's not really helping much. It's helping a bit, but everything else in terms of your costs of managing a business through the roof. We're seeing companies leave. We've seen countless businesses, entrepreneurs deciding to close up shop and move to Costa Rica and other places where there's the cost of running a business is lower. But slowly they're coming back. But the article really compares going back to it, if I may, we're going to see further cuts, potentially lowering reserve requirements. But the article compares this scenario to the final phase of a systemic collapse. It draws a lot of parallels to the Great Depression during what we call the fourth turning, which is the 80-year socioeconomic cycle. In the 30s, roughly 9,000 commercial banks failed. And a similar collapse today would have huge effects on the U.S. markets, Canada's TSX. But amid these risks, investors, the stressing point of this article, investors must hold alternatives like gold and silver to preserve wealth and navigate. And they quote it as saying, at such times as this, a vehicle which allows individuals and organizations and even companies to sidestep the financial system, preserve the wealth that you work for, and easily re-enter the new financial landscape with liquidity. Once everything settles, all the dust settles, it provides an ideal strategy to find shelter from this storm that's coming up. Attain even capital growth. This thing is up. The metals markets are up 30% on average. Much more to come because we are, as you mentioned, stagflation's here. What performs during stagflation? Gold and silver. So we make the most of these opportunities within this, call it chaos. And with the current setup, it's no wonder why we have veteran investors, Rick Rule, one of them, calling for $10,000 gold, $27,000 gold, Jim Rickards. We are going to be seeing these markets. Gold and silver will have its day, and a lot of euphoria in other markets, a lot of dissuasion, distractions. Don't get distracted. What's coming ahead? This is inevitable.
And you're right. It is already happening. We're going to talk more about that. The number 18778 silver, the website guildhallwealth.com. But to go along with these interest rate cuts, the idea that there's an internal panic that the financial system could be a lot more fragile than you really think it is. What about this? This came across, we put this on our X, Jerry. The U.S. stock market has never been so concentrated. The biggest U.S. stock market cap is 750 times larger than the 75th percentile stock, the most ever. What that means is that we have not seen concentration in the stock market since the Great Depression. Not even the dot-com bubble, not even during COVID. There's been several other occasions. We have never seen such concentration in the stock market. Jerry, just for the audience, what does that mean, concentration, and why is that so dangerous at this point in time? And as well, we know that oftentimes when they start lowering interest rates, you start to get recessions and pullbacks in the stock market.
It's a very dangerous position to be in when we're seeing the markets the way they are, totally concentrated. It's basically when a large portion of investors' portfolios are in a single stock or a small number of stocks, maybe the tech shares, for example. How it creates risk, it basically comes down to liquidity. It can become very difficult to sell the stock, even if it's a publicly traded stock. To try to get out at the same time, it's very difficult or probably impossible.
So does that mean that it's sort of people are chasing yield and they're saying, look, I'm doing really well on this one stock, so I'm going to chase it. And it becomes a self-fulfilling prophecy. That stock goes up, But as it's going up and people are making more money, it's more concentrated, which means you're adding more and more risk to it. Is that sort of the?
I think there's a number of reasons. Either like compensation, investor can receive portion of their compensation in stock options. People have inherited stocks, and I think a lot of the tech shares, AI, for example, early investors, they bought in early in the company and they're up a lot. They're going to hold on to it. So it's caused a lot of this over concentration in that share. They don't want to re-diversify and sell off a portion. If you're over concentrated normally in our market, you would look to the ratios, sell maybe some gold, silver for gold when the ratio is lower, reshuffle and always try to rebalance. But in an imbalanced world, I think the over-concentration has to be in physical precious metals because it's wealth outside of a risky banking system. It's risk away from depreciating currencies. The currency collapse is here. I think the currency crisis is unfolding with an immense pace. My background is in currencies. I'm seeing it, and the powers that be, call it what they may, they're doing whatever they can to mask the currency issue.
So you have a stock market exuberance, a quiet panic in interest rate cuts, and diversifying a portfolio would simply make sense at this point in time to hedge against these things that are happening. Meanwhile, gold and silver have had an incredible year. They went beyond my expectations, that's for sure. We'll talk a little bit about where we've been and where we're going in the gold and silver market and why it's so important to diversify and how they are actually a diversification strategy. How does it actually work? What is the inner structure of how does gold actually hedge against all of these dangers that are occurring right now as we speak? The number 18778 silver, the website guildhallwealth.com. If you want to own physical gold and silver in a registered account, we have a great promotion. For every $15,000 US you use to acquire physical gold and silver, you'll get a gram of gold, which is only continuing to rise in price. So that's a great way for us to give you even more discounting in the market. Again, 18778 silver, the website guildhallwealth.com. Jerry, for those who have held gold and silver for over a decade, we're pretty comfortable. We understand how this works. We've seen the gains. The longer you hold it, the less you sort of want to sell any. The more comfortable you get. You're that much further ahead, and you can sit back and see pullbacks in the market and be sort of sanguine about the whole thing and just kind of be able to have a 50,000-foot view of what's going on and be able to see what's happening in the market. What do you make right now of some of the things we're seeing happening in the market? We want to get into a little bit of Michael Saylor's comments this week. We talked a little bit last week about the Federal Reserve's comments on gold. We certainly see a lot of central banks buying, but we've seen a fair bit of selling this season as well, though. What do you make of that?
Well, the selling, it's that time of year. Obviously, RIF payments are coming up. So there's a shuffle. Same with the IRAs in the U.S. retail sellers. This is IRA season, so there's a lot of liquidations in the silver market. So we're going to get into the premiums on the silver eventually, but there's a lot of exuberance, a lot of euphoria, a lot of call it FOMO, fear of missing out. And I think the big message is, take that bird's eye view, take a pull back, because the fundamentals are still in our favor. Currency depreciation is on the forefront. All the central banks can do is increase the money supply. The M1 and M2, this is going to be continuing. Leads to inflation, loss of your purchasing power. Many Canadians, individuals are looking at their loonie after this jumbo rate cut we had in Canada. We're probably going to be ending up into the 142, 1.42 region, 1.45 region, perhaps.
And I think that when you see the type of pressure that's happening in Canada with the loss of the purchasing power and, the way the government's been spending like crazy and just the whole thing, the whole economy, it stands to reason that people are going to chase a big thing.
Yeah. I mean, it's natural. I think we all want to grow our wealth as quickly as possible because we don't know what the loonie's doing, right? The loonie is losing so much purchasing power year over year. And this is a major this is G7 currency. So we're not talking about Zimbabwe here. This is a real deal currency. There are some solutions. We need a new, obviously we need some new competent common sense leadership, which will open up the pipeline that can reduce inflation, get trade going. But
you know what? Speaking of that, it's so funny because
I saw you light
I've
up.
seen, because it's funny because I saw some clips of Kevin O'Leary talking about, hey, look, the U.S. economy being good is great for us because we're going to give them energy, right? And then you see this tariff talk, and Doug Ford comes out and says, oh, we'll just shut off the tap. And it's like, but we make money doing it. If you just take Kevin O'Leary's thoughts, it's like we make money by selling them the energy. Get it?
Exactly.
We want them to be very successful. We want to continue to supply them and make money by supplying them. So it just felt like, oh, you are the wrong person to make this deal.
Yeah.
It's
But
like,
I heard this was
all he's asking is to shore up the border.
That's it. Just do that.
It's like, if you don't want to shore up the border, you're telling us that you're happy to let these type of people into our country in the first place. It's an absolute mess. And I just feel like that's another part of, you were just talking fundamentals.
Yeah, the strategy.
So geopolitical risk is another aspect. This is why so many central banks around the world are accumulating it. And I know we talk a lot about central banks, and by proxy, it's also the citizens of those countries are also buying the physical metals.
Yeah, that's it. Geopolitical concerns, that is one of the major fundamental factors that are driving the demand in precious metals and the attention. As we saw, the oil prices are just wavering. Obviously what's going on in Syria, that upheaval there is also meeting Chinese stimulus plans. China announced that widespread economic stimulus is on its way. And we know when China goes to town and when they start printing helicopter money, it's huge, risking raising their deficits. A lot of deflation is happening. It's a bigger risk there in China than anywhere else in the world. Parts of China's real estate sector, obviously Evergrande was a huge headline to us over the last year and a half. Real estate sector there in China is down 80% from their high, according to Kobeissi letters. Is China entering a recession? They're asking. These are risks. This is stagflation, where you cannot have high inflation and low growth. This is the worst scenario possible. And looking at the fundamentals, inflation is one, but stagflation is worse. And this is the reason and the major argument to insure your wealth, and isolate and insulate your wealth away from a systemic crisis. A systemic crisis is what happens when whatever happens in China or Japan will impact the markets here. You want to be able to have something that is liquid and decoupled from all of the financial madness that we're seeing in the financial system today. And
with that massive amount of concentration in the stock market, you realize what's going on with the exuberance, that anything could start to take it down. Nothing is as safe as it might seem. But gold and silver, because they're actual assets that have no counterparty risk, they are negatively correlated to the dollar. So everything that is in a stock market is positively correlated to a dollar.
Yeah.
And so by having something that's negatively correlated to the dollar, you actually have an insurance policy. You have a little bit, you've put everything on different numbers on red. You want a little bit on just black so that you have that hedge. And that's what gold and silver continue to do. They've been moving up like mad this year.
Yeah.
I didn't think silver, I think this time last year we were trading at $22, or last October we were trading at $22. We just saw $32. We're recording on Thursday. We're a little bit below that now, but we've seen as high as 34. Gold last January, we were twiddling our thumbs going, we're at $2,000 and no one seems to notice. And then bang, it got well above $2,800. We're currently cusping 27 right now. I did not expect it was going to go up $700. Did you?
No, I mean, we thought fundamentally that we were very strong. If we look back at the 2024 gold price predictions of what the realities is today versus the expectations, we had Bank of America. They called $2,400 gold for 2024. We exceeded that. UBS called 2,200. We passed that. World Bank saw 1,900. We zoomed past that one. Wells Fargo, ING, all of these banks called pretty conservative numbers, just a little bit over 2,000. Yeah, that 2,000 mark was a big psychological, but we blew through that. And if you look at silver 3,250, that is the level to watch. The big banks are trying to protect that position, that marker. Once we slice through 32.50 silver price, we will see 35 and eventually up to 40, 45, 50. We're going to have leaps and bounds in the silver market. There were very few who got it right last year, but I think there's a lot of pressure to keep keep the metals where they're at. Keep the demand at a supreme low. Keep the metals in the coffers of the COMEX. But it's impossible.
It's what it is market management. They don't want to come out and say, here's where it's going. Let's enjoy the ride.
Well, let's create excitement.
If you put your money out of the bank and put it into gold, what can they do with it? Absolutely nothing. So the only thing they could offer you is an investment.
Yep.
Right? Something that is that has exposure to gold where they get to keep it, right?
The proxies.
But that's already too much risk. Because you're already giving up, you could already be giving up so much more if people decide that they just want to own the real thing because it's easier.
That's right.
It's more simple.
That's right.
So I think we can kind of understand, and also they have to be conservative. Let's just, they're always going to take a conservative stance in the first place. So when we see numbers like $3,000 from Bank of America for 2025, we've got to be pretty excited about that because that is your reserve price in a way.
That's right. This is exactly what it is. It's the ultimate safe haven asset, which is the reason why central banks need and require these reserves, and they're increasing their holdings. In the past decade, we have continual buying. You have Czech Republic coming to the market to buy up all of the silver, all of the gold that they needed to buy.
China's buying again.
China's back. After a few months of flattened reserves, they came to the market and pumped, I think, 5 to 6 tons of gold back into their financial reserves. And as Ronan Manley reported earlier, the Russian Ministry of Finance plans to allocate 114 billion rubles to buy currency and gold into their national wealth fund. So demand is coming from Russia, not just for gold, but remember that they're also allocating silver back into their monetary reserves, something that was stripped of silver back in the early 1900s. It was demonetized. It's coming back to the market. Gold and silver are money. And as the Dutch central bank says, gold is the perfect piggy bank. It's the anchor of trust for the financial system. If the system collapses, the gold stock can preserve as a basis to build it up again. And that's gold bullion, not gold stocks they're referring to. They're talking about physical gold. And the Dutch central bank know a lot about the gold. They're the central bank, a unique central bank at that has the gold revaluation account still on the balance sheets. They have the gold and they have the ability to revalue the gold price.
I think that as debts continue to increase, the economy hopefully gets much, much better. We've got some great positive news about technologies and such that could include silver. And at some point, though, you're going to default on debts. At some point, you have to pay off the debts. And what better way to do it than with revalued gold? So it is possible that maybe Jim Rickard's calls for $27,000 gold are not completely unrealistic. I mean, we want to stay in the lower atmosphere. We're happy to get to, 3,500. Then look, we're going yard by yard here, right? we're just trying to get new downs. We're not necessarily looking at the skyward prices, but the trajectory is there, and all of the reasons for that trajectory are there. Lower, devaluing currencies, the supply-demand picture, which we should talk about El Salvador, because that's a complete joke what they came out with this week in terms of they found trillions of dollars worth of gold and complete joke. We're gonna decode that in the next segment. But you've got supply-demand, lowering value of the dollar. You've got geopolitical risks that are only going to grow with the risks involved in the financial system itself. So you have to have something to protect yourself. And gold and silver have been around for thousands of years. They've outlasted civilizations. Okay, that thought that they were number one, were smarter than us. Okay, Machu Picchu. How did they do that? The pyramids. How did they do that? Smarter than us, smarter than your smartest tech head in the world, okay? Smarter than us. And gold outlasted them.
Yep.
Consider that when you're thinking about how to diversify a portfolio. And if you're going to do it right. Own it actually in your hand. Have it physical. If you can't hold it, you don't own it. Even in the registered account, you have the ability to go to the vault and personally audit your holdings. They'll pull out the bars. You'll look at your inventory report. You can match it to the bars, and you'll see that you own it outright. It's yours. We have clients who are taking delivery of it because they have their RIF payments, etc. So they take in-kind delivery. It's a bit of an administrative nightmare, but we're more than happy to do it because it just proves the vehicle that we have for clients, which is so key. Don't have secondary exposure to the market. Actually own the real thing, and you can do that in your registered account. You can do it directly, start small, crawl, walk, run. But if you want to have it in your registered account, go to getyourfreegold.com. You'll see that we have a promotion. For every 15,000 US you put into your RSP, TFSA, Lira, LIF, RIF, you're going to get a gram of gold back. What a rebate. What a rebate. Go to getyourfreegold.com for that. So one of the things that we saw a few things we've been seeing this week, and I would put it into the PSYOP category against gold and silver.
Whoa.
Is, number one, Michael Saylor's been all over the financial mainstream news like Bloomberg and CNBC, et cetera, and really talking his book. I saw him say something about the fact that they sold their stock and bought more Bitcoin with it, and he called it arbitrage, which I made a comment. I said he should be the next Federal Reserve chairman. His wordsmithing is almost better than Greenspan's, because when you use a home equity line of credit to buy a new home, that's not arbitrage. That's called leverage.
That's called leverage.
And the more I think about it, the only people that are going to put in $1 billion or $500 million at a time to buy that stock are entities that must be shorting it. So that if they lose and the stock goes to $550, because they're not getting anything on their money, no interest, no guarantees, they must be shorting it somewhere, or they must be shorting crypto, or maybe they're shorting the dollar. It's a hedge. Mm-hmm. It's a hedge in many respects. So the other part of it is he came out. That was the first one. He called it arbitrage. I thought that was funny. But to many people, they probably thought, "Oh, he's brilliant.
He's brilliant." This guy.
And hey, I always wish investors well. I mean, listen, I hope they get to the prices that they're looking for. Then he decided to go after the gold market, though.
Yeah, he did. I was shocked.
I don't know why.
I'm not shocked.
I don't know why. I thought that debate was over. But apparently it's still on the table. And he said that the U.S. should sell all its gold and buy Bitcoin. And it's just kind of like, why? Why are you doing this? I mean, clearly, as Vince Lancy said, and I agreed, and I saw it myself, you're talking your book. You're talking your book. You cannot afford to see this go down. There's too much on. This goes back to the concentration idea, Jerry. You cannot afford to see this stock go down. There's way too much on the table, and the only thing you can do is go forward. I mean, gold could go off $500 tomorrow. It won't change anything. Nope. It won't change the ultimate trajectory of where it's going. But you had Powell come out last week and say, well, Bitcoin is a speculative asset like gold. Like, what are you talking about? It's the least speculative thing ever. And then you have Saylor coming out saying you should sell your gold to buy Bitcoin. It's like, are you running out of clients? Are you running out of places where you need to find the funding? And then where's it free? El Salvador or something? Mm-hmm. The president comes out and says, we found, I don't know, $2 trillion worth or $3 trillion worth of gold in the ground. And instantly, everyone in the gold community was sitting there saying, yeah, maybe. How much is it to get out of that ground is the question. And then there was all laughter because people remembered when the story came out about a comet. Oh, we could mine comets. We could mine the moon. There's gold everywhere. Yeah, of course, at the right price.
Who's going to go on the comet?
Who's going to go on this comet? How much is it going to cost to get there? So very interesting sort of psyops against gold. And in the meantime, if you're following us on X, you'll see some great information that was coming out. Massive deliveries from the Bank of England, right? There was a net drop of 27 tons. Do you understand that they're holding it for other countries? People are taking massive amounts of delivery from the LBMA.
Yes.
And the COMEX. And when the COMEX wants to give you 1 ounce gold futures, it means they've run out of big boys to rip off.
Mm-hmm. Exactly.
They're trying to rip off the little guy.
Exactly. That is exactly what is going on. The COMEX is in complete panic mode. They have been in panic mode. The LBMA has been in panic mode since the silver squeeze began. Remember how large the silver derivatives market is, and the balloon that they have created. The weapon of financial disasters is the silver derivatives market. And as we're seeing, the PSYOP to move people away from don't take delivery. People are standing for delivery
and
in this market.
And not only that, Jerry, but you can start to see almost a setup of war in a way, a financial war of the digital assets versus the physical assets. Because while you might have Michael Saylor pushing MicroStrategies and crypto, which is fine. We don't have anything against crypto. We have something against him particularly. But he's telling everyone to sell gold. The U.S. should sell their gold. But yet, when you look at what's happening state to state, you get a whole different picture.
Are we going to go there right now? Yeah, we're going to talk about it because so many states right now are working on the gold market, are looking at the silver market. So as the PSYOP and as the focus from investors and the investment community are pumping up the euphoria in crypto, the states, the U.S. and their constitution are working to reduce and eliminate taxes on gold and silver to promote their use as assets, as investments, as currency, and ultimately constitutional money. Currently, there are 45 states that have already removed sales taxes on gold and silver. States like Jersey, they just recently joined, eliminating sales tax on precious metals purchases above $1,000, effective 1st of January next year. This is other states, including Utah, Wyoming, Texas, Arizona. They have previously exempted precious metals from taxation. And now we have the CFO Patronus of Florida saying, could gold and silver, he is actually going to be looking to join Congress in 2025. He wants to make gold and silver to become currency in Florida. The article came out. You could look that up. It's going to be in our newsletter. But his name is Jimmy Patronus. He's the CFO of Florida. He's the chief financial officer there, and he's launching a study to help figure out how can gold and silver be used to buy goods and services in the state. So that study is now underway. He says this is an exciting initiative that has the potential for enormous growth in our state. Gold and silver have been trusted assets for thousands of years, and it makes perfect sense to use them as legal tender. And as other commenters, a financial advisor says a lot of Americans are just simply looking for something else other than fiat currency, and they're looking for more independence. And I think that just hits the nail right on the head. You're looking for independence.
And it's not just Florida doing a study. I saw a few weeks ago Texas was looking at making gold and silver legal for payments. And it's state after state making moves. Not only that, they're not just making moves towards the gold and silver market. They've been making moves to put in legal documents to stop CBDCs from happening.
That's right.
So, there's what you see in the mainstream financial news, and then there's the other type of information to push back on that you would get from shows like this, The Real Money Show. The number, 1-877-8-SILVER, the website, guildhallwealth.com. If you want to get on board with the bull market and be ahead of the crowd when, you don't want to be buying gold at 5,000. You want to get in when it's low. And you also have to look at what's the potential for gold to go from 3 to 6, from 3 to 8, and the type of money that can be made on those gains, especially as the ratio of gold to silver starts to shrink. And the ratio falls to, say, 35 to 1, you could easily start to see silver into the triple digits and start to get into $200-$300 an ounce in the market. And it also comes, and this is the beautiful part, it does come with limitations. It's not that it's absolutely unlimited, sky high, forever, up. No, there's limits. And that's a nice thing to be able to know, well, when do I sell? With gold and silver, there's actually ways to be able to look at very clearly and say, oh, that's a good exit strategy. And we can talk about all of the different ways that we use, that other clients use, that experts have used. So it's a great market to be a part of. And you can do that by calling 1-877-8-SILVER, the website, guildhallwealth.com. If you want to look at holding physical gold and silver in your registered account, go to getyourfreegold.com because we've got a great promotion. You can get free gold with your purchases. Go to getyourfreegold.com. The number 1-877-8-SILVER, the website, guildhallwealth.com. Give us a call. Contact us through the website. We'll be more than happy to show you how to get involved in the market. It is one of the strongest markets that's ever been around. It will last a lifetime. It is a necessity right now, given the fragility of the markets, given the moves that central banks are making. But there's great things ahead, Jerry. I saw something this week about the carbon 14 diamond battery. I'm not sure if you heard about this, but it basically lasts forever for people's lifetimes. So imagine your kids' toys never having to replace a battery, although I'm sure it'll be very expensive to start.
Or where's the charger for my phone? Who took my phone charger?
Yeah,
that's always the missing thing in my house.
I love seeing stuff like that because these new technologies, you instantly think, well, how much silver is going to be used in the production of those and how much silver might actually be in those batteries to begin with, right? I saw Elon Musk put out something about the EV vehicle market. Obviously, he's very bullish on it. And there's more silver in that than any combustion vehicle. And, the usages for silver in technologies is just so massive that if you're negative on the economy, that's okay. If you're positive and you're a forward-looking person, then you'd want to have some silver in your portfolio too, because a lot of the stuff we have, there's a manufacturing component and things get built with stuff in it, and you need stuff, and silver is the stuff of technology.
I love that point, Jeremy, that you mentioned, that in either market, if you have an acceleration in the stock markets and growth in the market, you will need silver for industries. But if we have a pullback and a financial collapse, silver takes off the industrial hat and puts on the monetary hat. And then we have a collapse of the currency collapse or currency crisis or liquidity crisis. Silver goes to action again. And best of both worlds, bull and bear markets, silver is there for your portfolio to diversify.
So, Jerry, we've got about 3 minutes left.
Wow.
What else do you have on the table here before we call it a wrap?
Well, TD Bank just released some insights where they say TD Securities, there's little room for mistake. 2025 is going to be silver's year. Purchases that follows the start of a Fed easing cycle would entirely erode this buffer and further eat into the free float, where interest in the catch-up trade is already growing. At the same time, they say there is no evidence that we have reached the strike price necessary for the pressure valves to open. Silver markets appear to have coiled towards the next leg of the rally, and the silver market remains the single best expression of the energy transition theme in the commodities complex. There is a transition, a change of landscape in the technology space, and silver is at the forefront of that. And we're seeing that as well. Silver alert, the EFP on gold and silver premiums has gone up in 1 week over 100%. This is serious. Bob Coleman from Profits Plus ID.
That's exchange for physical. That basically means that if you want to take delivery of the product, you got to pay through the nose.
That's exactly what's happening. So the silver market is coiled, and it's a coiled spring. And lastly, in my thought, I brought up an article earlier that in referencing this new financial landscape with liquidity, individuals and organizations and companies need to sidestep the financial system. We offer the best solution for companies. If your company is holding immense amount of cash, keeping the powder dry, the powder should actually be kept in gold and silver in the vaulting system, protecting your company outside of a risky financial system, understanding that it's value preservation. It's going to keep the value of your dollars valued. It's going to protect against the devaluation. It will ensure your business even further and protect on the downside of the currency. It's currency depreciation resilience, but it's also liquidity when you need it. And if you don't want to sell it and you want to draw and tap into the liquidity of your gold without having to sell, and maybe you're a contractor, you need to pay your guys to go to work.
And by the way, that's the problem with concentration. When you have concentration in the stock market, when everyone wants to get out at the same time, you're not getting out. So you basically fly down the ladder, right? You just go, whoosh. I thought I had a stop at $400. I didn't get stopped out or sold until $300.
Exactly. And Guildhall has these solutions for your company if you're looking to tap into liquidity or even pay your employees in something that is not going to be devalued. This is what you want to do. A lot of companies are looking to figure out how they're going to pay their employees' wages and get them back to work. Well, maybe pay them in a currency that doesn't erode in value. Jeremy, your thoughts?
Well, that's it for the show. I don't have any more thoughts. You took it all. That was fantastic. If you've missed an episode, you can check out our YouTube channel, check out our Rumble channel, follow us on X. Want to thank everyone for joining us this week. It's The Real Money Show, the number 18778-SILVER, the website guildhallwealth.com. It's time to get into the physical gold and silver market, and we'll speak to you next week here on The Real Money Show on 640 Toronto.